Hi there, ladies and gentlemen, and welcome back to yet another cracking installment of the Matt Brown Show. This is the Built in New York series where I'm shining a light on some incredible talent, visionaries, founders just doing rad shit and changing the world as we know it. So I'm super excited rather to give you guys a front row seat to our next startup, that is Haystacks.ai. With me on the line is the co-founder of Haystacks, Pulkit, and then the president as well, Brandon Joyce. Welcome to the show, guys.
Welcome.
Thanks for having us, Matt.
Yes, we have double trouble on the line today. Cool. So, I'm going to start with you, Pulkit. You're obviously the co-founder. I would love to get your origin story, or maybe paint a picture for us. What's your background? Because I know you've done quite a few AI-driven startups before. So why don't you kick us off and give us the elevator pitch?
Yeah, totally. So I guess my entire career has revolved around collecting lots and lots of data and trying to make predictions about the future and trying to be more right than wrong. That's the best way I can put it. Used to run a robotics company in Asia that was basically collecting lots of data for agriculturists. Between that and starting Haystacks, I actually worked for a retired hedge fund tycoon in Singapore, and we were using lots and lots of alternative data, basically web-based data, to predict conflict between countries and geopolitical volatility, trading commodities. And after a very successful run for 2 years, I basically was like, okay, alternative data is the future. I got to build something within that space. So about 3 years ago, moved to New York from Singapore, ended up founding a company called NWO.ai, and we're now a leading trend intelligence company. So we forecast trends, work with folks like L'Oreal, LVMH, Procter & Gamble. We help them predict the next big trend before it takes off, again, using internet-based data. And so that's sort of like a recurring theme in everything I do. I sort of like try to make sense of internet-based data, petabytes and petabytes of it. And then Haystacks was just a natural subsequent step for me, just because my co-founder in NWO is also Saurav, who's also the CEO of Haystacks, and his background is private equity for real estate. He's raised almost $1.5 billion in his career, essentially acquiring properties, commercial real estate. And I felt that it was just very natural for me to find ways to apply the same data and find opportunities in the real estate market. And at that point in time, single family homes, we predicted it using our data that is going to be one of the greatest asset classes. It's going to be one of the top performers, and it turned out to be true. And so it's a very opportune moment. Everything just worked out for us. We ended up building out an incredibly talented team. Obviously, Brendan joined us from Pagaya to lead a lot of the efforts. And we ended up building out, what we believe is one of the best in class single family home acquisition platforms out there. So yeah, that's really the origin story. I would say from the time of origin of this idea to where we are right now, it's been precisely 18 months.
Wow, epic. That's quite a lot of growth and work to get to where you have done in such a short period of time. Maybe just to bring Brandon into the conversation here. Brandon, what's the backstory to you and your elevator pitch for our viewers and audience around the world?
Well, listen, yeah, that's Pulkit's a tough act to follow, so I'll put that there. But I've been in the real estate industry from an institutional perspective for 10 years. Kind of seen it all. Kind of worked through office, multifamily in different firms. Moved to single family housing at my last firm where I started a real estate business there. So I've been around primarily the residential space. Worked across the country and really just spent a lot of my career in the Sun Belt region of the U.S. So, states down in the Southeast and the South, high job growth centers. So, pretty lucky, pretty fortunate to kind of have the perspective of not just New York City, but what else is around and what's happening around the country.
All right, fantastic. So let's talk about the problem here for you guys, because obviously, Pulkit, as you mentioned, there's you have a lot of data intelligence capability, and it's very interesting to see what you've done. You've taken kind of like what you've done at NWO.ai, and now looking to position that and package that up for the real estate industry. So let's talk about that. What is the problem? And let's maybe start with Brandon, because you're up on the screen here. Is the problem as you see it in the real estate industry? What's the issue?
Well, I think there's a few issues. The first piece is there's so much data in real estate. It depends on the asset class. You look at an asset class like multifamily and apartments. There's been a lot of rich data. It's been an institutionalized market for years. So there's a lot of data there, and there's a lot of opportunity. Now, you kind of switch that to what's happening in the single family market, a very disaggregated, market with different sources of data. It's kind of not all in one piece. You've got MLS and listing data and census and population data and past transactions. So it's really all over the place. And really the big issue right now is nobody's found a way to kind of really put it together in a cohesive way, in a way that's distilled and that's very straightforward for investors to generate alpha. We believe that's the core of kind of our platform and our product is taking this data and generating insights that can really paint a picture of what's going to happen, where the growth is, where the growth isn't. That's the really exciting piece. And then to the side, the secondary piece, and particularly in the single family rental space, is it's a very new industry. It's the Wild West. And so, you've got a lot of institutional capital that has, started to deploy into the space. You've got guys who have been doing it for a decade, but there's a just really, really, kind of disaggregated investment process. It's difficult to identify opportunities. It's difficult to, kind of put the pieces together with property management, leasing, operations. So, there's a lot to do there. We're really excited about tackling that issue as well and provide access for investors.
So is it fair to say that the issue, another way of saying it, is that properties kind of been purchased for a long, long time based on guessing? And what you guys are doing is you're kind of bringing a predictive intelligence to the purchasing of property. Is that a good analogy or a good summation?
I think so. Yeah, I think that's a great way to distill it down and make it simple. So, right. Yeah, I'd agree.
So, Pulkit, how predictive is this? I mean, if we're talking about your ability to really predict, from a market intelligence perspective, like how accurate is this ability to predict, where the market is going to go in real estate?
Yeah, absolutely. So again, there are no good predictions without good data. That's the first thing I want to say. If you look at the real estate market right now, if you look at all the big, folks who are trying to sort of like find the arbitrage in real estate, especially single family homes, you'll realize that they're using the same traditional indicators that everybody else is looking at, right? I'm talking about historical sales and rental data. There's absolutely no alpha out there, right? Which is why a lot of people have attempted doing this and they have failed to generate substantial returns or generate interesting opportunities or underappreciated assets or find pockets of great growth because they're using the same old boring data, right? Again, the real predictive power comes from alternative data, right? So we look at stuff like education, crime, essentially Yelp reviews in a certain X miles radius from the property of interest. We look at cell phone pings, essentially mass migration patterns, people moving from one city to another. This sort of stuff is more interesting to our algorithms than the statistical information. And the reason I say that is because the post-COVID economy is extremely driven by the human narrative. The fact that the local newspaper might be talking absolute crap about the bars and clubs in a specific zip code matters a lot to essentially appreciation of rental yields, more so than we realize. So we basically built out a gray box, and I call it a gray box because if you look at a lot of predictive models right now, they're like black boxes. You don't really know what's going on inside. We wanted to give real estate investors the ability to maneuver different input weights so they can say, hey, I really care about education. I really care about crime. I really care about Yelp reviews, right? You can give it different weightings and you can figure out what strategies work best for you. So again, when I say, we have really good predictive power, again, it's completely subjective. It totally depends on what somebody wants. A pension fund wants something completely different from what a family office would want, right? So we give people the ability, our clients the ability to manufacture the alpha that they need, and then to be able to simulate, different outcomes and find the best one. So that's where how I would answer that question. Brendan, I think you can talk a little bit more about, how far along we predict things and what our back testing results are like.
Yeah, I mean, at a high level, I mean, we have the ability to, we cover everywhere in the United States right now, and so, U.S. is our focus. That's our market that we're active in. Our partners operate in, and really anywhere where there's substantial population. And maybe substantial is not the right word, but anywhere where there's a corner store and a gas station, enough population to support that. We've got some really good data and insights, and so what we do is our data team has put together an amazing algorithm model. Again, it's a gray box. It's something that, different investors can input and kind of weight differently. But with that, we're able to see, up to 5 years out in the future at the micro market level. So we have a 5-year forward view on rent price growth as well as home price growth. But it's been interesting to see the past few months and the increase in interest rates and how it's impacted things. And our models are capturing that and adjusting constantly on an hourly basis.
So one of the interesting things that Brandon was sharing with me when we first met was when you look at marrying alternative data, whether it's macroeconomic, it's like, how do you figure out stuff when markets are moving? And to your point, Pulkit, about the alternative data, what's the story about men's underwear here? Because like how does the sale of men's underwear affect property prices? Please explain that for the world.
I think Brendan is best suited to answer that question because this is one of his favorite stories.
Yeah, I was hoping you wouldn't bring it up, but look, it's a funny story, and I think it highlights something though. It highlights the ability to try to find indicators. But the genesis is, and I don't know where this came from or what professor. I mean, I'm sure there's some really good academic research that points to it. But the thesis is that men tend to buy less new underwear at the beginning of a recession. It's a barometer and kind of a leading indicator on consumer discretionary spending. And so oftentimes, and again, I'm going to misquote this 100%, but the idea is when men stop buying new underwear, there's a rapid change or kind of it's a foreshadowing event in consumer spending in a certain area. And so we were at a conference. This is something that I was speaking and it somehow came up on the conference floor, and it's still sticking with me today. But the point being is, we heard this from a conversation. This idea came up. And so we brought it back to our data team, and within the course of 5 days, we're able to kind of layer in this as a metric in which our algorithm can measure, because we do have the view on retail sales and consumer, how healthy the consumer is across the country and different micro markets, and thought it was really more of an interesting exercise than anything. And so now that is an input to our model. It won't say how kind of impactful it is. The results, but it is interesting in some areas, and really cool that we're able to kind of put these things together that are outside of the box, not in the traditional way that groups are looking at this, and see if there's any correlation or how that might impact things in the future, how it might have impacted things in the past, and see if it's useful for our algorithms.
So basically, if we're buying men's underwear, things are good. If we
That's
stop
right.
that's so funny, because I actually spoke to my wife about that. I was like, you're never going to believe it. These guys actually look at men's underwear and they're like, blah, 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 property price. She was like, no. It's like, how is that possible? But she actually said at the end of it, she was like, yeah, you know what? That's actually true, because men's underwear is like the last thing that you pay for. You know what I mean? Like, I don't know how you guys feel about it, but certainly it is in my case. It's like the last thing I give a shit about.
Yeah, I'd agree, and so I guess we're the guinea pigs for this model. And it's similar, like it's a similar idea or thought to like the Big Mac index, right? As a measure of consumer prices. Is it the best indicator? No. Is it a indicator? Absolutely. And it's the story that it tells is interesting. So.
But it's interesting, this idea, right? Is taking like non-obvious alternative data sources and marrying that with AI models that you have, to then get more sophisticated insights or intelligence or predictive intelligence around what's going to happen in the future. So maybe to bring Pulkit back into the conversation here, is let's talk about your product. So I really want to spend a bit of time here, because I think it's really important to land, even in like, there's a few things here. So one is like, how does this product of yours actually work? So when you think about machine learning, structured, unstructured data, and all this kind of stuff, like to what extent does your product use AI and scientific models to essentially predict the future? Like, how capable and accurate is your platform currently?
Yeah, look, so we're basically you're using standard Bayesian math to sort of like predict certain outcomes, right? We find the factors that are best correlated to rental yield. That's essentially the problem that we're solving for here, right? And as I mentioned earlier, our interface, I do believe that we have the best in class interface out there. It's been designed by essentially the folks who created the Tesla dashboard. So they did a fantastic job. And essentially, the interface allows you to pick and choose the factors from a list of factors that our system is predicting are most correlated to rental yield. And then you can sort of like build out a thesis using our thesis generator. And right after that, you basically get a short list of zip codes that are essentially where our system thinks, you will have the best odds of returning, amazing returns. And then from that point onward, the client can go and acquire those specific zip codes, those specific properties at any point in time. They can sort of like understand the thesis behind that potential underwriting. Again, it's completely AI-driven underwriting. So there's AI obviously involved with making the predictions on rental yields, finding out which factors matter the most. And then there's AI involved, natural language generation, and actually the underwriting process itself, writing the investment thesis and sort of like submitting the bids. And then from that point onwards, essentially the properties are closed enough, right? So that's one of our offerings, right? And then another way we are sort of like creating an offering, which obviously involves machine learning and AI, is sort of like a Bloomberg terminal of sorts, right? A lot of our customers don't just want to look at single family homes. Obviously, single family homes, we believe that's where the greatest opportunity is. But sometimes you just want to look at the macro view of the United States and try to understand, where are people moving from one place to another? What are the migration trends like, right? How's crime shifting across the country over a certain timestamp, right? So that's the sort of stuff that we can sort of like provide in a much reduced interface that's not just made for single family homes, for it to be used for commercial real estate. And we call that product Lens, right? So that's another way we're applying AI. And the third and final way we're applying it is a product called the Portfolio Simulator. And that's super interesting. We're rolling it out to our customers Q4 of this year. And it's actually a really good timing given the current market volatility. Not only does our system predict what the buy points are, but it's also really good at predicting what the sell points should be. So how should somebody with a massive portfolio move their assets around? Where should they be buying and selling? So generating those buy and sell recommendations, that's another interesting way we're applying AI and ML.
So I'd love to talk to you about consumer movement. So one of the things Brandon was telling me, and you touched on it just now, Pulkit, was like, you can ping people's cell phones and then figure out where they're moving and, extrapolate that data over time. So I think maybe one of the obvious questions I have, and I'm sure much of my audience does as well, is like, where does data privacy come into this? You know what I mean? Like, it's really interesting. I had another founder, CEO of a company called TechSmarter, and they aggregate text messaging like Signal, WhatsApp, iMessage, which apparently has been like ridiculously hard to do historically, but they're aggregating text messages, and then they're able to provide financial services companies with insights around compliance, insider trading, and things like this. But data privacy in general, it seems to be like regulatory wise, it's like, startups have just like completely gone into white spaces, and the regulators are like, holy shit, like how do we manage these guys? So how what is the implication of data privacy on what you guys are doing?
Yeah, totally. So look, we have a very strict rule in our company when it comes to. So there are two types of like data sets that we have access to, right? Like public data sets and private data sets. Public data set, we are extremely respectful of robots.txt and the terms of service of any website. We do not procure information that is not publicly listed. That's the number one rule in our company. We do not have access to any data that's behind a paywall or requires some sort of a subscription. So that's the number one thing. And that way, the US is in a really good place, because I know for a fact that Europe does not allow this. So that's where I sort of like disagree with Europe's, policymakers, because I do believe that publicly available sites that can be loaded on anybody's computer or browser, they should be scrapable, right? That's one of my, like, where I sort of like draw the boundary. When it comes to private data sets, We do have access to cell phone ping data, migratory patterns, and whatnot. But again, this is provided by essentially partners that have procured the data sets from people who are voluntarily giving up access to their location data, right? Again, we do not ping individual citizens' phone and try to procure their latest ping. This is provided to us on a certain frequency. I think Brendan, it is a daily refresh, and then we sort of like manipulate that data and understand it better, and then try to understand how migratory patterns are taking place. So again, these are data points that are completely provided to us on a voluntary basis by these said companies, and we tend to work with them, and we pay for those services.
Fantastic. And then when it comes to your portfolio product, let me just bring it up for everybody here. So just something I wanted to double click on with you is this idea of when to buy and when to sell. Is that purely driven through an AI, predictive intelligence, automating critical decisioning around buy and sell? Is it purely driven through technology, or is this something that's manually augmented or supported with humans? Like, to what extent is it fully automated?
Totally. I think, Brendan, you're best suited to answer this question.
I'll take this one. So I think it's a combination, right? Typically you look at a massive portfolio of assets that that institution might have acquired over a period of time. Up until where we kind of draw the line and differentiate is today, right? So what's happening today? Everything in the past typically is a manual upload, or our partners provide to us. So we'll look at things like a purchase price basis, existing cash flow, any vacancy, or concessions, or things like that. But then, as you look forward to, hey, what's next? That's where the AI comes into play. And so, if I had to split like where each of them are, that's how I do it. Is kind of anything before today is kind of given to us from past performance, and then our future models are very predictive in showing where the growth is, and we use that growth to determine returns for our investors based on a number of factors.
Right. So just to maybe change gears somewhat here. So obviously what you guys have done is like truly remarkable from my perspective. I mean, the fact that you can do what you're doing is even now after an 18-month roadmap is really, really impressive. If you think about all the things that you guys have done as a team, what stands out for you as something that's been the hardest thing? Like, the one thing is like, shit, like we really had to work our ass off and really think about how to solve this thing. What is that one thing? Is there something that comes to mind?
Yeah, I can jump in here. I think in terms of real estate, everybody's different, right? Everyone has their own goals and needs, and developing a product or developing a solution for groups that have different problems, that's consistently, we're consistently evolving, we're consistently adapting to the market needs. We've kind of segregated into three of our products right now, but ultimately, it's not a one size fits all approach. And so I think, continuing to gain the feedback from our customers, continue to hear what the pain points are and the problems are. It's a challenge. It's a fun challenge. I mean, I'll say that, because you're able to be nimble and kind of adapt and provide the data or the solution to different clients who have different problems. And that thought process on the day-to-day basis is a huge challenge, and it's a ton of fun. So, it kind of goes both ways, right? It's bittersweet. Sometimes it can be painful, and it's trying to figure out, hey, how can we solve this or attack this problem? But, we have some of the best guys in our team. We're very fortunate with the firm, and work with a lot of really smart and awesome people. So that makes just a really pleasant environment to continue to innovate and continue to evolve, because it's really, taking the data and making the data into useful insights is what we do. So it's a fun problem to have.
So you guys have raised a significant amount of capital, over the last year or so. I think it's totally 8 million or so to date. I'm curious to unpack with you guys from a product development perspective, given how technically, it's like a hard science problem you're essentially solving. How have you engaged with your customer to ensure that you've built, a future fit platform that really does solve a need for your institutional real estate investors and family offices and things like that?
Yeah, I think from a strategy perspective, what I can say before Brendan, you jump in, is like we were super prudent in the way we sort of like raised capital from specific groups. Essentially, we had the principles of pretty much every major SFR fund in the US, pretty much investing on a personal basis in the company. What that allowed us to do is sort of like get their buy-in, get real-time feedback from them at every step of essentially our roadmap. So it wasn't like we were operating in silos. The data scientists and data engineers receive the feedback from the product managers as we interview those principals, because we're essentially solving a problem for them, right? So yeah, just having our ears close to the ground was incredibly important, and which is why I feel like we've managed to build out what we've built out with very few iterations and with the speed and the agility that we've showcased. Brendan?
Yeah, I mean, just to add, I think on the existing customer front, it's so important that, to hear their feedback, to hear their pain points, what problems they continue to face in the market, and see how we might be, a solution. So, it's going back to how it's not a one size fits all approach. I mean, we bring on any new customer and really view it as a partnership. It's not like we're selling, ice cream bars, not to disparage any, guys who sell ice cream, but our product is constantly evolving, right? Ice cream's pretty stable. So, I think it's continuing to have these conversations, continuing to hear what's going on in the market. It's been a lot of fun. I mean, the market's been moving in all different directions. So to see how that impacts or may or not impact different investors, different customers and clients, and hearing what might be an interesting solution for them is continually how we work. It's, again, a constant evolving process, and the feedback is, paramount to continuing to provide, the best service for our clients.
Mm-hmm. Yeah, I was talking to, I was chatting to Steve Blank and David Schonthal on the show, I think on like Tuesday. And we were talking about the current climate, macroeconomics again, and its kind of impact on startups looking to raise capital, especially startups such as Haystacks, who, everybody's constantly in a raise of some kind or another. And it seems to me like in the current market, the cost of capital is a lot higher. Investors are being more selective. It's now the VCs are looking not at valuation, but looking at actual how much profit are you actually generating. So I'm curious to get your guys' views for other startup founders, wherever they might be in the world, around raising money in the current climate. What is your advice? Like, what's your point of view, number one, on like the impact of the current market on raising capital, VC money, and then secondly to that, what should another founder look for in an investor? Meaning, do you see capital as being equal? Like $1 million is from this guy is the same as $1 million from that guy? Or is there more to it when you guys specifically look for an investor in Haystacks?
Yeah, so I think the best way to answer that question is essentially I could provide a behavioral founder lens to essentially tackling all of this. And Brandon, you could potentially answer that from an operational perspective, right? So having gone through a crisis before, right? I built NWO.ai during COVID, right? And we ended up flourishing, and we made a lot of mistakes, but we also got a lot of things right. During a time of crisis, it's very important to be outspoken, to be really showing your value prop, and to be basically showcasing the success stories more so than an off-crisis situation. A lot of times founders that I've personally encountered, they tend to go really quiet on their investors, and not just their own investors, the entire investor community. They tend to sort of like reel in and look inward and basically just disappear off the face of the earth. And I think that is a really horrible approach. It's very important to be visible now more than ever. So we were super lucky with Haystacks. Obviously, we've been hustling 24/7. We actually had a record flow of deals going through our platform. We actually just put out a press release through essentially we work with a Massachusetts-based family office. They transacted $20 million of SFR in certain micro markets using our platform. That too in the middle of, what could potentially turn into a housing market crisis, right? And we were pretty loud in sort of like showcasing that to the investor community, and we've been fielding a lot of interest as a result of that. So I think it's actually a strategic advantage to be more visible during this time where everybody else is just extremely quiet when it comes to fundraising. Brendan?
Yeah, just to add, I mean, really the focus is just continuing to build a better product, continuing to learn from the feedback. It's just so important, and I think feedback comes from a bunch of different places. Some of the best feedback comes from our customers and the guys who are in the market, but our investors are key to that as well. So we've been very open. We've had a lot of conversations with the guys who have a lot of different perspectives, and taking that all into consideration, I think, is just a key piece of advice I'd offer to other groups or other founders of the company, is just continue to evolve, continue to adapt. And right now it's like we've had a busy year, we've got our heads down, and it's just continuing to provide more service to our clients and build out the platform. So that's candidly been our focus. We've been lucky enough to do that, and that's what we'll keep doing. So that's what I've got to say.
So Pulkit, just to maybe double click on what you mentioned there, when you say be more visible, like what does it practically mean for you?
So for me, it just means that within the space that I'm currently in, I want to sort of like stand out as a subject matter expert, and sort of like providing my predictions and making sure that the right set of people are looking at those predictions and sort of acting on it. That's sort of like what we do as a business at Haystacks, exactly what we do at NWO. And so it's been really crucial for me to be front center when it comes to that.
Right. So position yourself as like the thought leader in this space, so to speak. Right.
That's correct.
Okay. So Brandon, just to come back to you, or maybe to both of you, this is the question. Like, you guys are kind of sitting with a lot of data and insight, actually, and I don't think like the man in the street, like my neighbor, he doesn't know what you guys know. And this would be a subjective question or what have you, but I have to ask it. Where are we going? Like, is there a housing crisis that's like coming? Like, is that a thing? Do you see data supporting that probability or not?
Yeah, I mean, I'll say this. We've had a lot of black swan events with the market. You look at, we've gone through a global pandemic together with record low interest rates. Arguably, extended low interest rates, and we've just had a lot of all sorts of things. Supply chain issues last year. And we continue to see, now we're kind of coming out of things, and the Fed's continuing to raise rates, higher interest rates. I mean, there's no doubt it has an impact on real estate pricing. You look at, real estate is bought typically with financing and leverage, and when your cost of financing goes up, it's definitely going to have an inverse impact on pricing. Overall, I'd say kind of it really depends on the market. Different markets are starting to interact differently to what's been happening, kind of in the global financial markets. And so, it's just really important and imperative to have local level insights coupled with, kind of a broader model that does take those macro considerations. And, we do take, interest rate movements and bond markets in consideration in our algorithms, because they're just such a big piece of the real estate market. So, where this goes, I mean, I've got some ideas. I think, we're going to start to see, more and more, interesting opportunities from different ends. But it's really interesting to see how it plays out, because I mean, who knows? I mean, if the Fed starts tightening rates again, or there's so many different, kind of solutions that could happen. So, we're looking at the data, we're watching on a day-to-day basis and seeing how it impacts or could impact things in the future, and making adjustments with our clients based on what we see.
Well, if you can advise them when to sell, if you have those insights, I mean, that's the kind of thing, that makes you guys immeasurably valuable.
Yeah, I mean, it's a fun conversation to have. I mean, it's just like, we get to pull out the data and say, here are the insights we're generating, and how can we help? And so it's a great conversation to have, and we're continuing to have it with more and more groups. And as we bring on more clients, we're happy to continue to advise from that end with our AI. So it's a lot of fun.
Yeah, I'm sure. Pulkit, to bring you back into the conversation, you mentioned the word mistakes earlier, so I thought I would double click on that for our audience. So everybody likes to talk about their successes, but success doesn't teach you much, or as much as failure does or mistakes do. What would you say if you cast your mind back to like day one of Haystacks, and you think about all the things that you've overcome, the mistakes that you've made, the lessons that you've learned, what would you say has been your biggest mistake, and what did you learn from that in the process of building Haystacks?
Well, there's a 90-10 ratio in terms of the weight I would give to these two mistakes that I'm about to tell you, because 90% of all my problems are people problems, and 10% of them are actually related to the business. So just like, finding the right set of people to bring on, right? Obviously, my co-founders and Brendan here on the call, they come from a place of immense experience in real estate, but I literally knew jack shit about real estate. When I co-founded the company with Saurabh, I basically am beholden to him for all his learnings. But in the initial days, it was so hard for me to talk to, let's say a data scientist at, a big firm, sort of finding arbitrage in real estate, right? Like, I didn't know the right questions to ask. It was a huge learning curve for me, a very steep one. So had to figure all of that out. And I would say I could have gone a lot faster in my learning process had I spoken to the right set of people. So yeah, initially made a shit ton of mistakes in terms of bringing on the right set of people. So yeah, there was a little bit of that. And then the remaining 10%, which I think we did a pretty good job in solving it just because we're such an incredible team, I'm really proud of them, is essentially turning AI into explainable AI. Everybody wants that, but the process of figuring that out is, it's a road paved with thorns. It's essentially, nobody wants to trust a system that makes a rental yield prediction. What people want to see is essentially what's happening behind the kimono, right? What are the factors that are going into making these predictions? What's the percentage of distribution of characteristics that make these predictions? Can I play with those predictions? So this was actually a big part of our learning curve, right? Initially, when we demoed the platform, even with the immense network of people we were showing this to, it was really hard to get a buy-in. But over a period of time, once we realized that was the key thing that we need to solve for, which is make the AI explainable, make the insights transparent, that's sort of like when we started hitting, one success after the other.
What makes that so hard? It's interesting because you're the second founder. I spoke to another one yesterday, Dorothy Grant. She's also out in New York, former model, Vogue, Paris, the whole thing. And so what she's done is also a similar thing with AI and ML. It reads a contract, right? And it says, cool, here's the legalese clause that says, well, it could be written in legalese, so you don't get it, right? So if you read it, you're like, I don't know what that means. But meanwhile, you're signing your life away for the next 50 years, and you can never work for another agency ever again. And so what they've done is made explainable the legalese, right? So the AI reads it and then reinterprets it and presents it back in more simplistic terms. Why has that been so difficult historically?
I think, like I said, it's a human behavioral problem. I let Brendan sort of like chime in, but from a human behavioral perspective, I can say it on a personal level as well. When you surpass the petabyte scale in terms of access to data, you tend to become extremely cocky. You think that you have literally answers to all the problems in the world. You can basically build a Rehoboam Westworld style prediction engine that can literally predict the future of everything and manipulate it. You start seeing limitless possibilities, and then you tend to miss the finer details, because the finer details are really, talking to your customers, making sure that they're comfortable with even looking at the data and even looking at the insights the way they're being presented. So I think it's purely it's an ego trip that needs to be overcome. Brendan?
Yeah, I think, my answer to this is, look, AI is incredibly, it's huge, right? And there's a massive amount of data. There's a lot of distilling, and there's just so many smart people. Like, some of the world's smartest people are working on AI right now. And if it can be distilled to insights that are very simple for someone like myself to read, because, by no means am I the smartest person in the room, but if I can understand what this is telling me and the story that the data is telling me, then we're onto something. And so that's something that's purposely we did when we built this platform out, is we, kind of took a workflow. It's like, hey, we've got really advanced data, but in analytics and AI and algorithms and all sorts of really cool things. But ultimately, like, what is this telling me, and what are the insights I can get from this? And are they simple and easy to read? And so I think that bridging that gap has been a challenge for a lot of a lot of groups in the past. And I think as AI continues to evolve and gets more simple and translatable to someone who's just a simple real estate guy like myself, then I think we're going to start to see a lot more usage, and yeah, it's going to be great.
Mm-hmm. So I'm going to have a bit of fun with you guys. Let's start with you, Brandon. So I'm going to give you the keys to the Matt Brown Show time machine. Don't go back too far, okay? But I want you to go back to day one, like when you joined Haystacks, and you think about like the whole journey that you've been on, and the product and investing, all that kind of stuff, finding the right people and that kind of thing. What's the like one piece of advice you would give yourself about building this Haystacks business?
Go for it. I think just start. I mean, really, that's what it was. I mean, I think when I came in, I spent probably 3 or 4 weeks with the team, kind of meeting everybody, understanding, and this is coming from me because I come from a world of very large organizations with a lot of different layers, and you start to have the politics and things like that you need to navigate, and bureaucracies and things like that. We've got something that is addressing a problem, and I think the sooner that you can kind of just take the plunge and continue to start to put things out, and even if it's simple, the new product, make it really, really easy and simple to do for version 1, and then go back and make it even better for version 2. So the advice I'd give myself is just to continue to trust the team, and with the team is just make the decisions and get it moving, rather than trying to overanalyze something. So if I did it again, that's what we do.
Mm-hmm. Pulkit, what's your advice to yourself? Day one, let's go.
Oh boy. It's like Tom Cruise in that in the movie. He's like, "Show me the money." I would say it's "Show me the ugly," because I tend to hyper focus on the good stuff and not so much the ugly stuff. And in the beginning, there was plenty of ugly stuff, but my mind fools itself to just focus on the good stuff. So I would say show the ugly stuff to the advisors, the mentors, the customers, get quick feedback and rapid iterations. That's literally the one thing I wish I did differently.
Mm-hmm. So Pulkit, sticking with you, what's your vision here? I mean, like, you're obviously one of the co-founders, and along with Brandon and the rest of the team, like, as a team, like, what difference are you ultimately hoping to create in the world through Haystacks?
Yeah, I think real estate is such an opaque industry. It's in fact the most opaque industry I've ever encountered. I mean, I had the chance to play around with commodities. I had a chance to play around with stock market, essentially consumer trends. Real estate is by far the biggest mystery, and it's still a mystery for me. I mean, there's so much that can be solved for. There's so many things that can be optimized for. I think that the 10-year vision for us really is to become a market maker of sorts. I do believe that just like in the stock market, the bid-ask spread has been reduced to a few dollars, and there's so much liquidity and there's so much transfer of value that's taking place. I truly believe that the same thing should happen with real estate. And I think that's when, I believe that SFR would potentially be added to the Odyssey Index and becomes, one of the greatest asset classes that's ever existed. I think Haystacks could be the force multiplier that potentially helps SFR get there. I know it's a very big, lofty, hairy, audacious goal, but I really hope we get there.
Mm-hmm. And Brandon,
Yeah,
go ahead.
Sorry, just gonna echo that. That's my answer to the same thing. It's just real estate's so opaque, and providing access and data and just making it more liquid for everybody, I think, is my goal.
Yeah, it's good. It's the right stuff. So guys, let's wrap this up. I always ask founders this because I think it's a very interesting thing around knowing what motivates you to do these things. Because, like, it's interesting. I spoke to another founder the other day, also in New York, and he said, you know what, like, I have more bad days than good days. And I'm like, who chooses that, for your life? Like, you had those fugly problems up right. You mentioned Pulkit, like it's constantly, it's like one problem, then you get to the next one. And so I'm curious to get your view, Brandon, and then Pulkit, we'll wrap up. Is like, why do you do what you do, Brandon? Like, what gets you out of bed in the morning?
I mean, I think you're hitting on it with the problems. I mean, there's so many addressable issues, particularly in real estate, and it's a wild west. I mean, single family is the wild west. I mean, you have lots of capital coming into it. The market's changing. You've got companies like Open Door and OfferPad who are offering solutions. I mean, there's a lot of innovation that's happening there. And with that, I think you just have a lot of different companies doing really amazing things because there's a lot of issues. And so finding these issues, finding these pain points, talking to the market, talking to our partners, our clients, really just talking to everybody and trying to identify what is it that we can make easier. And that's the fun piece. That's what gets me out of bed, is trying to find or build solutions for people. And look, it's messy. And, I could be sitting at a big multinational firm in a cubicle or in an office, whatever the case may be, and kind of just doing the same thing day in, day out. But that's not what drove me or drives me. And so, I found myself solving problems, and that's the fun piece.
Mm-hmm. Pulkit, what's your view?
So I think from my perspective as a founder, it's really just the fact that I sort of like realized this epic secret during COVID, which is, the pre-COVID and the post-COVID economy. It's two different worlds. Post-COVID economy is completely driven by the human narrative, and very few people in this world realize it. I think there are people with incredibly high net worths. There are billion-dollar companies, have absolutely no fucking clue that is the world that we're living in. And just the fact that I was able to jump on the secret, ahead of other people and sort of like become a subject matter expert in the space and sort of like spread the gospel, as you may say, and then build a product around it. I think it's just such an incredible feeling to be able to do that, and then to be able to make predictions and to be right about it. I think that's really the big trigger. It's keeps me high all the time.
Yeah. All right, cool. Guys, thank you so much. It's been great, having you on the show, and I think what you're doing is amazing. I think it really, really is amazing, and I'm super privileged to have had you guys here. So thank you for your time.
Matt, thanks for having us. It was a pleasure.
Anytime.
Thanks for having us, man. Take care.
No worries, dude. Thanks, guys. Cheers.
Bye.